All right. So let's see. What's up, guys? Today is January 28th, Tuesday, January 28th, and it's currently 9:38 a.m. Eastern Standard Time. So I know we haven't done a live session in forever, well, in 8 months. But I'll give you guys a back story on that. So, over the last few months, I've been testing out some new actually not testing out some new strategies. It's ideally just improving upon the strategies we've always used. So during this live sessions, what I'll be doing is just to break down further what I've found over the last couple of months with the strategies. Now, with this strategy, one thing that I found, so last year when we were, and if we go to right here, if I'm sharing the right screen, let's see. Yeah, if I'm sharing the right screen. So last year in 2024, in January, so normally I take a vacation in December and January. So January, normally there's no trading. So in February, it was just a break-even month, zero return, same as March. April, we had a 5.25% return, and this is for the official trades. May, 0.75%. June, we had a loss of minus 1.875%. July, a gain of 2.25%. August, 2.25% gain. September, loss of minus 1.5%. October, gain of 0.75%. And November was just a break-even month. And December, of course, no trading. So overall, last year we had, and I need to do the calculations, but I think maybe a positive gain of 6%, meaning if you took every official trade, you'd have been up 6% for the year. Now, one thing I was trying to improve upon last year was to take fewer trades. Um, and the other thing that I came across too was so we have the main strategy is the SAR strategy. So when I was doing some back testing on the SAR levels strategy, and so this is a trade on gold that's currently running. So what I'll do, I'll just do a quick back test for you guys to show you, to just give you a brief of how the trade or how the strategy is working or how to apply it. So for this particular strategy, let me see if I can just make this one window. Of course, it's going to go to US 30. Let's see. What we'll do here is, let me just open a new window here. Let's see. Okay, I'll just use this gold chart right here. Actually, never mind. Here's what I'll do. Uh, Take this off. I apply the one window. So for this strategy, first thing I applied on the 1 hour time frame. That's the time frame that I trade. You can trade it on the 15-minute, 30-minute, 4 hour, daily. It's just a preference for me. I try to do it on the 1 hour time frame. So what we'll do here, we'll just back test the entries on gold, and let me see for right now if there are any trades that are currently running. Actually, give me 1 second. Let me do this. So there are no entries on the hourly, so that's fine. So actually what I'll do here, I'll use this chart for demo, and then I change this to the hourly time frame. And then I hope I'm not muted, but anyway, so here what I'll do is I change this to the 1 hour time frame. I'll backtest for gold, but it's the same strategy for US 30, for any FX pair. And the beauty with this strategy is you get fewer trades, but the hit rate or the win rate is pretty high. So what I'll do, I'll just backtest the trades or the entries so far with gold. So for this strategy, you need of the indicators we use, you just need the markups indicator. You need the markups indicator. You need the SAR levels indicator, which is what draws those SAR levels. You need the zones indicator, and pretty much just that. Yeah, you don't. I'm only using the reversal to change the color of the candles. So you can use the EMA indicators. So normally I use the 9 EMA and the 200 EMA. So the 9 EMA is a short-term EMA indicator, and then the 200 EMA is the 200 is a longer term. So it's the last 200 days. The 9 EMA is the last 9 days. So pretty much just those indicators. And then I'll just turn off the zones indicator for now. And then what we want to do, we want to backtest since the beginning of January or since the beginning of this year. So I'll just apply the bar replay tool. So most of the times I know last year during the live sessions, we used to take a trade pretty much every session. But since this trade or this strategy only gives you entries, it can give you an entry at 11 p.m. at night, 8 a.m. in the morning, 5 a.m., 1 a.m. in the morning. So during the live sessions, unless maybe I show you guys a demo maybe on a lower time frame, like the 15-minute or 5-minute, we're probably not going to be getting a lot of entries during the live session. So pretty much what I'll be doing on the live sessions is to streamline and go over this strategy over and over again. So here we go. We'll just backtest the entries again for the month of January for gold on the 1 hour time frame. So let's see here. So what we want to observe mostly, so you want to pay attention to let's see if we have those shapes. I know I haven't been on the live session in a minute, so it's kind of so you want to observe this line. So let me take off the markups indicator as well. So you want to observe this little lines here, this 4-hour buy, daily sell, whatever. So for this indicator, so remember, SAR stands for stop and reverse. Sometimes it can stand for supply and resistance, depending on what you want to call it. But SAR levels are ideally levels in the market where if price gets to that area, you expect to see some sort of rejection. So in this indicator, you have SAR levels from the 1 minute all the way to the monthly time frame. But for me, in the indicator itself, I only have turned on the hourly SAR levels all the way to the monthly SAR levels, because the higher the time frame of an SAR level, the higher the probability that price will reverse from there or price will react from there. So that's why for me on my chart, you'll probably just notice my lowest SAR level. And when I talk about SAR level, I'm talking about these lines, right? So the green line and the red line, right? So the green lines are ideally buy areas. The red lines are ideally sell areas. However, since we're talking about stop and reverse, buy areas, an SAR buy level can be used as a selling level, which I'll show you guys how that's going. So again, just to reiterate, the focus of this strategy is this little lines right here. So this lines, the green and the red lines. So and then of course this other lines in here, this is like the 9 this is the 200 EMA, and then this is the 9 EMA. So again, I'm just backtesting. During the live session, we probably again won't be getting a lot of these entries, and the way I enter these entries nowadays, you just use a pending order. So so let's start backtesting these entries for January for gold. So again, on the hourly time frame, but you can use the same analogy for the 4-hour time frame. You can use the same analogy for the daily, for the monthly, depending on whatever time frame you use. So what we are looking for, so there's two types of entries, right? So the first entry is which is the one that I found is the most profitable, is the test. So if you guys remember when I started doing streaming last year, when we were trading the actual SAR strategy, the original one, we had a test and rejection entry, and then we had a break and continuation entry. So we had these two types of entries, test and rejection and break and continuation. Now, for this particular strategy, I found the test and rejection entry is better than the break and continuation entry. And I'll go over all of those, in depth. Now, for the test and rejection entry, once an SAR level is created, so you see right here where price is, we have this 4-hour buy zone, right? And then we have this daily sell zone. So what we are looking for when an SAR level is created, you're waiting for a candle to test this level. Now, if a candle, so for me primarily, the way I'm trading this strategy, I'm focusing on the test and rejection entry, not the break and continuation. The break and continuation has a bit of a lower win rate than the test and rejection. Now, for the test and rejection, I'm looking for a candle to test either of these areas. So if it was just one area, and to me, it doesn't matter whether it's a SAR buy zone, it doesn't matter whether it's an SAR sell zone. If I have a candle that let me see if give me 1 second. If I have a candle that comes here and does not close above but closes below this area, I consider that a test candle, right? So long as the wick of a candle tests any of these areas and closes below, that is the test candle. So let's assume here, and I think maybe one of the trades in the beginning of the year was a sell, and I think it won. So let's assume there's a candle that comes in either of these two lines and tests it and closes below. That's confluence number one, right? Remember, so for this strategy, you need the SAR levels indicator, you need the zones indicator, and you need the markups indicator. So let's keep going and see if there's a candle that's going to come up here and test. So this one came close, but it did not test this area. Now, the next one came and closed above. Now, if you have a candle that closes above any of these zones, then that would be a break and continuation entry. Now, again, remember for me, and I backtested, and I'll show you guys statistics for that for last year. I backtested US30 gold and Bitcoin for the whole of last year. And the break and continuation entry, again, did not perform, pretty well. However, let's assume you want to do a break and continuation entry. So if you guys remember last year when we were trading the SAR levels, if you're trading a break and continuation entry, you want the break candle and you want the continuation candle. So you want both of those two candles to close above an SAR zone, and then you'd enter on the third candle. In this strategy, so when I say test and rejection, think of it as two candles. So the test candle is your confirmation candle. The rejection candle is your entry candle. If it's a break and continuation strategy, the break candle is your confirmation candle. The continuation candle is your entry candle. Again, for this strategy, you are using pending orders. You're not using market executions. In the original SAR strategy that we used to trade, the test and rejection candles used to be confirmation candles, and then the third candle used to be your entry candle. If we were trading break and continuation, the break and continuation candles used to be your confirmation candle, and you would enter on the third candle. The only difference with this strategy is that you're entering on the second candle, or you're setting a pending order for the second candle to be your entry, and you're not entering on the third candle. So let's assume we are trading the break and continuation entry here. So the first thing, so this is your first confluence. So you've had a candle that has broken and closed above your SAR levels, right? Then that's confluence number one. Confluence number two, and let me probably type this in right here as confluences, and I'll save this, and I also plan on doing like a PDF document just to show this entry. So confluence number one is rejection or closure above an SAR level. Then confirmation number two, you need to ask yourself if you're buying. So ideally, this one would be a buy. So if I'm just trading off of one confluence, oh, my bad. Let me see here. Let me write this down again. Confluences. So confluence number one is rejection. So for me, the preferred entry is test and rejection. So rejection or break of an SAR level. Okay, so that's confluence number one right here. I'll just put this ones right here to the side. Confluence number two. So this one ideally would be a break. Ideally, this one would be a buy. So if I was just trading the one confluence right here. Again, you need like three confluences. So remember, confluence number one, you need to see whether it's a rejection or a break. Confluence number two, you need to ask yourself if you're buying. In this instance, it would be a buy, right? So here in this instance, we had like two levels right here, which it closed above. So if I was trading this as a break and continuation, I would set a pending order on the most optimal level, which is this daily sell level below here. Now on TradingView, if you're selecting either the long or short tool, by default, it will give you like a nice stop loss. And by default, the stop loss, it will try and make it below the previous low. So normally after I apply it, I try to round this off to the nearest like whole number. So this one is like a $8.50 stop loss. So in this instance, I would just do a $10 stop loss. And this one again is on gold, but same idea on US 30. It's better to just round off to the nearest whole thousands or whatever, or 100. And then the other way you can do it, you can do either below stop loss below the low, stop loss below either the 9 or the 200 DMA, depending on if it's a buy or a sell. But for me, preferably, I try going for the nearest thousands or the nearest 100. And again, for this strategy, most of these trades, I would consider them intraday trades. Now, so here, then the next one, I want to ask myself, if I'm buying, I need this zone to be green. So that's where the zones indicator comes in. Now, if we turn on the zones indicator, what do we see? My pending order is in a red zone. So it's in a supply zone. So ideally, yes, I can still take the trade, but does it line up? It only lines up with one confluence. So this is a trade I would not have taken. Now, the other confluence, let me turn off the zones. The other confluence is the markups indicator. So the markups, we've done this a lot of times, like, since I started streaming or since I started this platform, we used to use the order blocks indicator, and I've always used it. So if I am buying here, if my entry for a buy is here and I'm seeing a 4-hour bearish low order block here, what does that tell me? That tells me that yes, price can come and tap me in and then come and tap this order block and go straight to stop loss, right? So again, the only confluence that lines up with this, and this would be considered, this I would consider a break and continuation entry. The only confluence that lines up with this trade is the rejection or break of an SAR level. Remember, the other two confluences are buy. If buying, make sure you're in a green zone. If selling, make sure you are in a red zone. So that's pretty much, I would say, common sense, especially when it comes to trading. Because when you're buying, you want to make sure you're in a demand zone. When you're selling, you want to make sure that you are in a supply zone. Now, the third confluence that we've gone over, if you are buying, make sure there are no bearish order blocks around your entry. If you are selling, make sure there are no, what is it? Bullish, I would say. Yeah, bullish order blocks around your entry. So simple, three confluences, that's all you need. Now, this again, it's nothing different than what we used to do last year with the SCR levels. This strategy teaches you a lot of patience. It will give you like 5 or 6 trades a month, but like you'll have like either a 70% or almost an 80% win rate. The issue with this strategy is that some trades will come in like 11 p.m. at night, 2 a.m. in the morning, 5 a.m., 6 a.m. So you might miss some of those trades. But this is pretty much the strategy I was using the whole of last year, as much as I wasn't live streaming. And again, I'll talk about all of that later on or some other time. But this to me is a nice strategy. Okay, so let's see how this trade would have played out, right? So again, only one confluence has been satisfied. For me, I always make sure all three confluences are being satisfied. So for this particular trade, And so here, remember, you're setting a pending order. You're not doing market executions. If you want to do market execution, you can do a alert at your entry area. Now, if these SAR levels disappear at any moment, again, remember this is the 1 hour time frame. Same analogy for the 4 hour, for the daily, for the 15-minute, for the 30. This pending order is only valid only if this daily sell or whatever SAR level it would be remains at the same area. If this SAR level shifts, then your work there is done. You go ahead and delete your pending order. So let's see if this would have been satisfied. Again, it's still valid until it's not. So you keep going. Okay, so you can see that the daily sell SAR changed from where it was. So what you do here, you go ahead and delete. But again, this is not a trade I would have taken. Again, for me, my preferred entry is the test and rejection entry, not the break and continuation. So we go ahead and delete our pending order here. And then we wait for the next one, right? So here, what do we see? So let me replay here. Here we can see there are two SAR levels that have been created, right? So we have this one to the top. Let's see when it loads. The next one. Okay, here it goes. So we have an hourly sell here. Again, remember, so if you guys remember in the beginning of the stream, I said, it doesn't matter whether it's a sell or a buy SAR. You can use a sell SAR for a buy. You can use a buy SAR for a sell because SAR stands for stop and reverse. So here, remember, my preferred entry is test and rejection, not break and continuation. So for test and rejection, what's the first confluence? Rejection or break of an SAR level. So it has this SAR hourly sell was created, and guess what? The candle tested it and closed above. So confluence number 1 has been met. What's confluence number 2? If now this is a buy for me, this one would be a buy. But again, I need all 3 confluences to align. So if I'm buying, I need to turn on the zones indicator. And if there's no green here, for me, I wait for the next entry. As simple as that. Like it's that simple, right? That's why you have this 3 confluences right here. Give me a second. There's an alert that went off. Let's see if we can get a. Okay, no worries. No entry. Okay, so here my buy is done. I'm not looking to buy. If you try to buy here, you're buying again, you're buying next to supply and you're buying in no man's land. You can still do that, but for me, right, it's all a preference for you guys. My work is just to show you guys like how I do it, but for me, I need all 3 confluences to align. So here, I'm not interested in the buy anymore because I know there's a red zone here. So I keep waiting for the next entry. So the next entry, perfect. You see here, what do we have here? We have an hourly buy. So this is an SAR level. What confluences has it? And feel free to stop me if you guys need or have any questions. So we have an hourly buy here. This hourly buy SAR. So the candle that created it also interacted with it. So it actually touched it. So the entry. Okay, so that's confluence number 1. What's confluence number 2? Now, this one would be a sell for me. So if I'm selling, I need to make sure that we're in a red zone. What zone are we in right here? We're in a red zone. Perfect. So confluence number 2 has been met. What's number 3? If I'm buying, make sure there are no bearish order blocks. If I'm selling, make sure there are no bullish order blocks. So we have the order blocks indicator. What is the closest order block? This daily bearish low. So here, this trade or this entry satisfies all 3 confluences. So after this, and for this strategy, I normally just check in after like, what is it? Give me 1 second. For this strategy, I try to look at the chart like after every hour, like at the top of every hour, because again, I'm trading on the hourly time frame. For you guys, if you choose to trade on the 4-hour time frame, you'd be looking for entries like at 9 a.m., 1 p.m., what's the other one? 5 p.m., 9 p.m. again, right? So here, I would have set so if I go back here, I would have set a pending order. So remember, that SAR level we just saw was created at the closure of this candle. So since we are back testing, right, we are not going to see it like in the live environment, but we know that there's an SAR level that was created here. So, and again, this is the test and rejection entry, which is my preferred one, which is the one that has the highest win rate. So here, You just do that. And what did I tell you guys? If you're applying the long and short tool for, if you're applying the long and short tool for TradingView, by default, it will set a TP and stop loss for you. It will set a TP and stop loss for you, either at the previous high or something, or previous low. For me, my preference is to round off to the nearest, like thousands or whatever. So here we can see it has like a $13.5 stop loss and TP. So, and for me, this trades, I know previously last year we used to do a 1:2 risk to reward and setting break even at a 1:1. Nowadays, I just do a 1:1 risk to reward. The reason for that is that these trades are very rare to come by. Again, you'll probably just get like 8 trades a month, right? So you can still do a 1:2 and set break even at a 1:1. But what I've found with this strategy, since it's, remember, stop and reverse, sometimes it will hit like your 1:1 and then come back, and it would ideally take you out at break even. So even with a 1:1 risk to reward last year, I had a very high win rate with this. And I'll show you guys those statistics after I'm done with this. So, and after this, I'll go pretty quickly. So if you haven't understood any of these confluences, please, you can unmute yourself and ask, because after this, I'll just go quickly to show you guys the other entries. So here we know that there was another, there it is, right? So here I would have set a pending order and I'm already tapped in, right? So let's see how this trade would have gone. There it is. So this is the first winning trade in January, right? So again, I'll just backtest the trades for January until where we are so far. So currently 1 win for gold. Now here again, if we go, so that's a test and rejection entry. So this right here is a test and rejection entry. I'm not going to focus too much on the break and continuation because for me, I haven't found a good win rate with it. But so this is SAR levels rejection. However, let me delete this real quick and show you guys this. Actually, never mind. There's no break and continuation. So remember, for these entries, you're looking for an SAR level and you're asking yourself, which is the first candle to interact with that SAR level. So if it's a test and rejection entry or rejection entry, when an SAR is formed, it has to be the first candle, not the first candle. You are looking for the first candle to reject off of that level. If it's a break and continuation entry, you're looking for the first candle to break and close on that entry. Now, the reason I'm talking about that is because if you look at these 2 candles here, you can see technically somebody can argue, and my work is just to guide you, but you can always make your own strategy. Technically, somebody can argue that this was a break and continuation entry because you had this candle break below this hourly sell level, and then you set your pending order, and technically it's a break and continuation level. However, the reason I insist that you're looking for the first candle to interact with that level is because here we also did have this candle that interacted with this hourly sell candle, hourly sell level, and closed above. So technically this candle, yes, it did break and close below this level. However, it wasn't the first candle to interact with that level. Now, it's, you know, it's up to you guys. You can create a strategy based off of that. But personally, the way I trade, I ask myself, which is the first candle to interact with that SAR level. Okay, so again, this is the first win for January. It happened like you can see what time it happened, right? It happened at 2200 hours, so that's 10 p.m. at night. So for people like me who trade only between like 9 to 5, I would have missed this trade. Now I have what I'm trying to, I have automated this this indicator to give you an alert so that it can automatically take the trade for you. The only issue is that it's pretty difficult to, since I'm taking these trades with pending orders and not market executions, it's pretty hard to automate a pending order. But anyway, I'm like 50% done with automating that. So this strategy, how I do it, again, I come back to the charts, or I look at the charts like an hour, you know, at the top of every hour, and then I see, are there any levels that have been created? And then I wait for price to react from that level, and then I go ahead and create a pending order. But anyway, so this was the first win in January. It happened on January 2nd. So let's keep going and see if we, again, I'll go for today. I'll just focus on the test and rejection entries in order to save time. So again, we are looking for the next entry. Here we go. Okay, so here we have an hourly buy right there. We have an hourly buy level. And again, when I say hourly buy, it doesn't mean that you're buying on that level. It's just an hourly buy SAR level. So which is the first candle to interact with this level? This is it. It tried to close above, but then it came back and closed below. Confluence number one met. Confluence number two, if I'm selling, so this one ideally I'd be looking for a sell. So for sells, remember, if you're for sells, the candles will be rejecting from the top. For sells, the candles will be rejecting from the top. For buys, the candles will be rejecting from the bottom. So it doesn't really matter whether it's a buy or a sell SAR level. You're just looking at the area or at the level at which it's rejecting from. Is it rejecting from the top or is it rejecting from the bottom? So here, technically, I would be looking for a sell. Confluence number one met. Confluence number two, if I'm selling, I need this to be a red zone. Is it a red zone? No, it's a green zone. So automatically, I don't even try to even force a trade or look at that trade. So I keep going and wait for the market to give me another level. Now, here's a quick example of a break and continuation level right here. So we can see there were two SAR levels here that price broke and closed below. Now, here again, you ask yourself, are we in a green zone or a red zone? So here we're in a green zone. The issue with the break and continuation entries is that most of the times they will satisfy two confluences, either confluence one or confluence three, but rarely will they satisfy confluence number two, because most of the time when price is breaking a certain level, even think about it, right? Basic supply and demand, right? So let me do this real quick. Basic supply and demand. So if I draw this basic supply and demand right here, and you do this, right? So typically in supply and demand, this one would be supply or resistance, and this one would be support, right? Can't draw straight. And this one will be support, right? So when you have a break of support, normally this whole zone is a green zone, right? So that's the issue with the break and continuation, why it rarely will satisfy the second confluence, because this candle that normally breaks support, you're breaking a green zone or you're breaking a demand zone. So rarely will you get, like here, it's rare for you to get a supply zone. Same thing again to the top. So that's why most of the times, and sometimes what price will do, it will fake out, right? So it will break below and then come back up and then keep pushing. That is the issue with applying or with, going for the break and continuation entry as opposed to the test and rejection entry. So again, here, remember the same example I just gave. So price here just broke this level of support right here. Price just broke this level of support right here. However, as much as it's broken that level of support or demand, you can see we have heavy demand here. So that's potentially the issue with going for the break and continuation entry. However, right, this one would still have played out, but for me, I'm not interested in like forcing anything. But this one would be, if this was a red zone. So sometimes, rarely it will give you that entry, and when I've noticed it satisfies levels or confluences 1, 2, and 3 is during Asia session or right before London, because during periods of low liquidity, that's when price will be creeping up to a level, and sometimes that's when you'll be getting the London reversal or something like that. So during Asia session or during right before London, you can get or even 7 a.m. Eastern Time, New York, you can get very nice break and continuation entries. However, like right now, during New York session, it's pretty rare for you to get a valid break and continuation entry. So you guys, you can backtest that and see see when you do get some of those. So again here, all right, so here we can see we formed a daily sell SAR level. We formed a 4-hour buy SAR level. So if it's me during that day, I'm just waiting to see how price will reject on these zones. So if I keep going here, this candle broke and closed below this daily sell. So I already know automatically there, I have no opportunity to enter a buy. So I keep going. And the only what is the only untested SAR level? It's this one down here, and again this one above here, this hourly buy right here. So let's see again. Price closed above that, so again no entry. So we keep going and see. Perfect. Now here, what do we have? So let me replay this real quick. We've that 4-hour buy that we are waiting on, it's right there, right? Let's see what the next candle does. So the next candle fails to close below it, so it rejects on it. It's the first candle to interact with that SAR level. Confluence number 1 has been met. You have a rejection. What is confluence number 2? You ask yourself, since this now would be a buy, ask yourself, are we in a green zone? Perfect. We're in a green zone. Are there any... So, and also since we are buying in this area that we are buying at, do we have any bearish order blocks? No. So this, again, this is a nice entry. So what do? I come here, I set a pending order. Now, here's the other part too in this particular trade. Now, this is a tricky trade. It's not really in a green zone. It's below the green zone. It's literally below the demand zone. So does it satisfy the second entry really? No, it does not, because we need this whole area to be green. But knowing myself, I would have taken this trade with a lower risk. And then let's see, stop loss. Let's see what TradingView is giving us. So we have a $10 stop loss. So I would go for like a $15 stop loss here, $15 TP. So again, here, I'm not really following all the confluences. But I kind of like this because, again, you ask yourself, when it rejected here, what did it go for? It went and picked up liquidity at this 4-hour bullish high order block. So here I would set my pending order, and then let's see how this one would go. All right. So long as this level remains there, the entry is there. However, if this 4-hour, if this SAR level where I've set my pending order shifts, then I'll go ahead and delete my pending order. All right, so we have another entry here. So okay, so this one already shifted. So guess what? I'll go and delete it. So hopefully you guys can see how it has shifted. So it has shifted from the candle that tested it, and it moved a little bit to the right. Moved a little bit to the right. Okay, no worries. So we keep going. So here there's an SAR level that was created above here. And again, I'll start moving pretty quickly. Just to save on time. There's an SAR level that was created above there. This hourly buy right here. So confluence number 1 met. It was created. This candle interacted with it and closed below. Confluence number 1, check. Confluence number 2, are we in a red zone? Perfect. We're in a red zone. If we're in a red zone, then the next step I ask myself is, are there any opposing order blocks? So here I'm looking for a sell. So technically, if I'm setting a pending order, that's my entry right there. So again, here I go to the nearest whole number. So this one would be a $15 stop loss. Now here, what's the issue here? If I'm taking this entry, we have this hourly bullish order block here. So, and it's about 50% of my profit. Now this trade I would still take. The trade I wouldn't take, like how to tell when an order block is in your way. So let's assume this sell was right here. So let's assume this sell was literally next to this hourly bullish high. Now, this one I wouldn't have taken, but in this instance, it's about 50% of my TP. So I can, this one would be a risk I'm willing to take. However, I would consider this less of a probable trade compared to this one. So if you guys remember with this trade, all confluences were 100%. We had the rejection. The zones were fully red. There were no order blocks in the way of, there were no bullish order blocks in the way of this trade. In any case, we had bearish order blocks. So this particular trade right here, I would consider this a super A+ setup. This trade right here, I would consider it like it satisfies all 3 confluences. However, we have a bullish order block that's like 50% of the way. But anyway, long story short, I would have still taken this trade personally. And let's see how this one would have gone. So this one would have ended up being stopped out. right? Now, if you're only taking A plus setups, you wouldn't have taken this. However, not all A plus setups will win, and not all, and sometimes you'll even have a C setup that wins. So it depends on your level of risk. So in this particular trade, yes, I would have taken it, but unfortunately would have gotten stopped out. And for the month of January so far, up until this day, would have been break even. So one win and one loss. So again, this one would have been a SCR levels rejection right here. And this so far, if I remember correctly, this one was the only loss for January so far, unless there's a loss that happened like either yesterday. So let's, again, from here, I'll move a little bit faster just to show you the others. So we keep going. Where is this? Okay, so we keep going here. So what do we have here? So we have an hourly sell area right here. The first candle that gave us the sell, this SAR level, interacted with it. So confluence number one checked. Then we ask ourselves, are we in a green zone or red zone? So here, since I'm looking to buy, you can see we are in actually no man's land. So we are neither green, neither red. So this particular trade for a buy, I would not have taken it. This one right here. This one I would not have taken it. It's in no man's land, and actually it's closer to a red zone. So I don't want to be buying into supply. So I wouldn't have taken that trade. So again, I keep waiting for the next level to show up. There we go. So what level do we have here? If we backtest this real quick, this is a rejection entry. Again, another nice rejection entry. It looks pretty good to me. Has satisfied confluence number one. Then I ask myself, if I'm selling, I need to be in a red zone. So are we in a red zone? Yes, we are. So what do I do here? I would have set my pending order. So remember, this previous candle is the one that gave us the entry, right? This previous candle, it interacted, it rejected. Actually, wait, give me a second. It never, actually, this is the first candle that gave us the entry. So what we do here, we set a pending order there. Again, here, I want to go for the next whole number. So it's already a $10 stop loss, so you can do $10, but normally I try to go up as opposed to going down. By up, I mean I try to round up as opposed to rounding down. So this one, I would just, with what TradingView gives you by default, you just round up to the nearest other bigger figure or psychological level. So here, let's see if we're going to get tapped into this zone. So it satisfied confluence one, rejection, check. We are in a red zone. And then number three, there are no, so we are selling. We don't have any bullish order block. Perfect. So I would consider this an A plus setup. We have all these bearish order blocks that are protecting our position to the upside. So then we keep going, and then let's see if we get tapped in. Okay, perfect. So we're tapped into this trade. Trade is in drawdown, and let's see how this one goes. So this one would have gotten stopped out. And then I think this one is the one that either came back down. So again, anyway, so this one would have ended up being stopped out with a $15 stop loss. So I guess there were two losses for that month of January. So we keep going. So we have another area right here. We have another area right here. For this area, unless you're doing a break and continuation, and let's see if this one, again, would have satisfied any break and continuation. So that's a break entry for the zones here. Again, you're in a red zone. So break and continuation, you'll rarely find an entry that satisfies everything. So let's see if we can find another one. So currently we are net losing one position. So normally I do like 1% risk per trade. So if I was taking this trade, so we have 2 wins and 1 loss. No, I'm sorry, 1 win and 2 losses so far as of January 9th. So we are down 1 position. Then we keep going and see what else we get. Okay, so this trade right here. So we have another test entry right here. So we have this hourly buy. So price rejected off of that. What zone are we? We are in a red zone. The only other thing for this one, I don't like trading in areas where we have where there's an overlap between a red and green zone. By that I mean, yes, we have a red zone here. However, you see this green zone right here. So this kind of shows you we still have a lot of demand going to the upside. So again, yes, we're in a red zone. However, we have a demand zone right here, and it kind of shows you that price, we have a demand zone within this supply zone. So normally I don't want to be trading in zones, in an area where zones are overlapping. So technically, I would consider this a plus setup, ideally because of this overlap. However, we are still in a red zone. And this one, I would have taken it, but taken it with a maybe lower level of risk or something. So here you set your pending order. That confluence is what order blocks do we have? So here we are in a bearish order block. So we have the three confluences. The second confluence, as much as the second confluence has been satisfied, we have an overlap of zones. I don't like trading within an overlap of zones. So anyway, let's see how this one would have gone. So this one is a $6 stop loss. So I round up, I go to a $10 stop loss and $10 TP, and then you set your pending order. There it is. So this one would have, I think this one was CPI Friday. Yeah, I think it was CPI. So you can see it would have hit TP, but this one was, again, a pretty risky trade, ideally because of that overlap. And here's the thing, right? You see the reason why it came back up after hitting TP. You see that overlap of zones that I was telling you guys. If we replay this real quick, so I think if it wasn't a CPI day, this trade would have just ended up in stop loss. So here, what ended up happening, remember this little green zone right here? That's where they came up and picked up liquidity in order to move up. So that's the downside of trading within zones that are overlapping. So as much as this strategy gives you like 8 trades a month or something, sometimes it will test your FOMO or impatience, because sometimes you'll start justifying trades. You'll start saying, okay, I'll take a trade even though it's in an overlap zone. But anyway, so this one would have been a win, but it almost ended up in a loss. And I also think if it wasn't CPI, because I see this one was Friday, January 10th or something. So maybe there was CPI, no, not CPI, NFP, because this spike looks like an NFP candle. So if it wasn't NFP, I'm almost certain this trade would have ended up in a loss. But anyway, so right now we are back to break even for the month of January. So we have 2 wins, 2 losses, and then we keep pushing forward. So after this win right here, let's see. So this was another entry here. That same day on Friday. Right here. If we go back here, there was another entry here. However, now as you'll see this one, and given that it's CPI, let's see. Okay, so there's an entry for a buy here. And okay, this is a perfect example for a confluence number 3 not working. So here we have this hourly sell zone that's valid. So we have this NFP candle that closed above. However, you can see here, if we turn on the zones, yes, we're in a green zone. However, if you were to put a pending order here, you are inside this order block. So you can see we have an hourly bearish high order block there, hourly bearish low. So this buy, I would not even have considered taking it. Now you can see at the top there, there's an SAR that was created here. So this SAR level was, yes, in a red zone. Let's see, in a red zone, it's a rejection entry. We don't have any order blocks. So yes, this one would have been a sell entry right here. You go to the highest number. So this one would be like a $10 number. However, this one, if you were to take this trade, you'd ideally have 2 back-to-back trades, or you'd have just come back from winning this particular trade right here. But anyway, so yes, this one is a setup. I would consider it a B setup because we don't have any order blocks. So it only satisfies confluence. It satisfies all 3 confluences, but sometimes I like seeing where price is likely to head. Is there any order block at the top or whatnot? But anyway, yeah, so this one would have been an entry here. This one now would have ended up being a loss. So again, we go back to being -1 for January. So this one would have been a loss. And this is assuming you're taking every single trade. So if you're taking every single trade, so this one would have been a loss. And then at the top here, we have another trade. And again, keep in mind, this is Friday during CPI. So I'm not sure, again, it's not recommended to trade on Fridays, like especially towards the afternoon. But again, I'm back testing this, assuming that you're taking every single trade. So if you're taking every single trade, what do we have again here? We have this entry right here for a sell at this daily buy level. So I do this, I round up to a $15 stop loss, round that up. And then let's see how this one would have gone. So this one would have come back and this one would have hit TP, right? So again, you're back to break even for the month of January. Again, this is assuming you are taking every trade. So this one came up at about 10 a.m. The first one that lost, and then the other one came again at about 11 a.m. So again, would be back to break even. Let's see if this particular one would have given us. I'm trying to see if I can find a valid break and continuation entry. It's pretty hard to find them during New York session. Honestly, because this is a break entry, but again, you're in a demand zone. So again, we are back to break even for the day. I'm sorry, for the month so far. Here we have a test and rejection entry. Let me move this a little bit. Here we have a test and rejection entry. All right, so if we turn on the zones here, we're in a green zone here. However, what do we have? Excuse me. What do we have below, like around our entry? We have this hourly bearish order block, hourly bearish high. So what that is to tell you, as much as this, so this one, it only satisfies 1 and 2. It doesn't satisfy 3 because if we are buying right below our entry, we have this hourly bearish high order block. What that is telling you is that if price closes below this SAR and closes below this bearish order block, it can pick up liquidity and go straight towards your stop loss. So personally, this is not a trade I would have taken because we have a bearish order block right next to where we are. And you can see if we had taken this, or if you had taken this trade would have ended up being a losing trade because you'd have rounded up to the nearest whole number, which is a $10 stop loss, and you'd have lost that trade. So again, that's why you need to make sure all these three confluences align. So we are still at break even for the month of January for that particular trade. Let's see if we have any other entries. Right. So here we have an entry, but we're in a red zone. So this one would have been a buy, but again, we are in a red zone, so no entry right there. So here we have an entry here. Yep, so we have an entry here for a buy. However, again, for this particular entry, let's see what we have here. All right, so we are in a, let's see what zone we are in. And if I move, let's see what zone. Should be green. Okay, so again, so this is a valid buy. However, we don't have a green zone. So as much as this one would have been a nice trade, we are not in a green zone since we're looking for a buy. So we are just in a white zone. So I don't even look at that. We have a potential sell at the top here. So let's see if price would get up here. All right, so price did not get up there before that one shifted. All right, so then we have this one at the top here. So we are in a red zone. It's a little bit right below the red zone, but it's close enough to that red zone. So confluence number one, we have the rejection off of that level. If buying, make sure you're in a green zone. Selling, you're in a red zone. So we have a red zone right there around where our entry is. Do we have any, so since we're selling here, do we have any, say, bullish order blocks? No, we do not. The nearest bullish order block is about 70% of our TP. So again, it's not an A plus setup. It's more of an A setup. We are also in between. That bullish order block is in between a bearish order block. We have this high of the hourly bearish and the low of the bearish order block. Unfortunately, I don't think this trade was triggered. Yeah, so it before coming to fill us in, it went all the way towards TP, but then came back up. But if you had the pending order still filling in, you'd have still been triggered, and this one would have ended up being in a loss. So this is why, like with these hourly entries, you want to look at the chart like every hour, right? Every top of the hour, because if it was me for this particular trade, I would have deleted this pending order like by the time price was coming towards my TP. So you don't want, since you're doing a pending order, you don't want price to go in your direction so much before triggering you, if that makes sense. So for me, for this particular trade, unless say I set the pending order and then I went to do my own business, the trade, yes, would have ended up in a loss. But if I was monitoring my pending order, by the time price was coming, if I replay this, by the time price is coming down here, because keep in mind, we have a bullish order block like 60% to our TP. What that is telling you for this particular trade, normally price would come and hit your TP or come close to hitting your TP, and then it's going to pick up liquidity at that bullish order block, and this and go, reverse. So again, that's the key thing you need to understand with the SAR strategy: stop and reverse. So you always have to have that in the back of your mind, is that it means stop and reverse. So here for me, in this particular time, when this because I would have hoped to be filled maybe at this candle right here, and as soon as I didn't get filled and I see price going in my direction without filling me in, and it's coming to this order block, to this bullish order block, what that is telling me is that price is coming to pick up liquidity here and then go back up. So for me personally, in this particular scenario, if I was around around my computer, around my phone, I would have gone ahead and deleted this order right there. However, if you had forgotten to delete that order, you would have ended up with a losing trade right there. And you can see what they did right there: picked up liquidity from that bullish order block, and then kept going. But anyway, so hopefully that makes sense with how this one is done. Let me see. So I think we're almost done. January 15th. So let me zoom past this others right here. So key thing to remember with this strategy, you are doing pending orders unless you do an alert and do a market order. So here we have this order right here for a buy. It's a test entry. It's a rejection, satisfied confluence number 1. Confluence number 2, if I'm looking to set my pending order here, so you're looking at which SAR level it interacted with. So it created 2. It created this hourly sell. It created this 4-hour sell. Then you ask yourself, which one did it interact with? It only interacted with the one at the top here. So this one's like $8 stop loss. So I scale up, or I round up to the nearest whole number or psychological figure. So that's like a $10 stop loss. Are we in a green zone? Perfect. We're in a green zone. Do we have any order blocks in our way? No, we do not. So this one is, I would consider it an A setup. If we had like a bullish order block here, I would consider it an A plus setup. But the lack of a bearish order block makes it a setup. So for this one right here, you can see goes to TP, right? And this one, again, assuming you're taking every trade, so you have one win right there. And again, down here, what do we have? We have a test and rejection. This one, again, would have been, personally, I don't stack trades. So if I'm in a buy, I'm not going to enter into another buy. Because again, you're kind of exposing yourself to higher risk. But this is assuming you're taking every trade right there. This one too, again, test and rejection. So this entry would have given you your test candle. You set your pending order on this area, another win. So again, that one would have been 2 wins back to back. Again, assuming you're taking every single trade, which is probably not possible unless you don't sleep. But anyway, so this one so far for the month of January, you would be up 2 trades if you're taking every single trade. Assuming you forgot to delete, or not forgot, assuming you didn't delete the other trade I just went over, you would be up 1%, or you'd be up 1 net win for the month of January. And then we keep going, and let's see if we get something else. So up here, what do we have? At the top here, we have this SAR level. What zone are we in here? We are in a sell zone or supply zone. You set your pending order. You'd be filled on this candle right here. Let's see what the stop loss. So TradingView is giving us an $8 stop loss. You round up to a $10 stop loss. Are there any order blocks in our way? No, they are none. and then you're in the trade already. And then let's see how this one would have gone. All right, so this one again, this one would have lost that trade right there. So you'd be back net one win, or if you had taken the other loss that you'd have deleted the trade, you'd be at break even. And then there is this particular one right here at the top here. So this one as well, same thing. All right, let's see. So this one, $12 stop loss, you round up to $15. All right, so this one as well, you'd have hit stop loss, so you're back to break even. If you took the other loss without deleting the order, you'd be back at or you'd be -1. So the key thing, you want to watch out for the A+ setup. So you want the best ones are like you see this first win that we had here, where not only did we have an order block in the direction of our trade, that's what you want. You want to have an order block around where you are trading, because the issue comes in with this particular trades where there are no order blocks anywhere around there. Normally what's going to happen is that price will go and tap into that order block before even maybe coming back down. So be careful when you're trading in zones where there are no order blocks, and especially if it's a Friday. Let me replay this real quick. The other thing I've noticed, or I noticed last year after taking a couple of similar losses, let me see first if we get any other trade from here. Let me see the direction of this one. Okay, so there's no entry there. I want to see where price goes after this. Never mind. All right, yeah, if it comes back, depending on what price does after this. So the other thing I noticed, if I circle back to this particular trade right here, or these two trades that lost, these two back-to-back trades, let me go to this one right here. If you find yourself in, okay, perfect, yeah. If you find yourself in a scenario where, yes, it satisfies Confluence 1, it satisfies Confluence 2, and it satisfies Confluence 3, but for Confluence 3, nowhere between your stop loss and TP are there any order blocks in your direction, right? So here, since we are selling here, we would ideally have wanted to have a bearish order block somewhere here, either right below towards our TP, or somewhere between our entry and stop loss. One thing I noticed is that, and this I've noticed especially on Fridays, I don't know what day this was. This one was Wednesday. What price will do, as much as this is a valid entry, it will go and tap the order block that's, especially if your stop loss is, if the order block is way above your stop loss, it will stop you out, go and tap that order block, and then come down to TP. Now, the alternative to that is, and this is depending on what you want to do, the alternative to that is you ask yourself, what is my stop loss and TP here? If you find that you're selling and you have an bearish order block, the nearest bearish order block is way up, way past your TP. What you can do, you ask yourself, okay, I'm doing a $10 TP and stop loss. You tell yourself, instead of setting your pending order at that SAR level, set your pending order at the order block, if that makes sense. And again, I lost a couple of trades last year, ideally because of this. So it's either you increase your TP, or I'm sorry, you increase your stop loss all the way above that order block at the top there, or you move your, so here, if you're increasing this one, you'd end up, so let's just again, yes, it would have ended up in a loss, but let's figure out how we could have avoided that loss. So here you have two options. Do a 30, I would say a $30 TP and stop loss, which is pretty wide for gold. So enter in the same area, because sometimes price would have come here. It's possible that price could have easily tapped your entry and then went straight to TP, right? That's a possibility. But it's also possible that price would go first and tap the order block before coming back down. So you have to ask yourself, do you want to be in the trade and then have a wider TP on stop loss, or do you want to take the risk of missing out on the trade and then go and set your pending order at the top first? So let's just do a quick run through of this one and see how this one would have gone. So for this particular one, with a $30 TP and stop loss, I'll just play it out like really quick and see how this one would have ended up. And this one is almost today. I think you would still be having this trade running today. So this one would have ended up being stopped out, right? With that $30 one. So this one, again, $30 is pretty heavy on gold. So I wouldn't even have done that. So the alternative for that is, since you're doing the $10 already, you go back to your $10 TP and stop loss. However, this one, you have to be willing to miss out on the trade because it's not guaranteed that price will go here. It's just an observation I've had while losing trades last year or losing this particular setup because there are no order blocks here. So for this particular one, you can still do your 10-10 and then you wait and see if price will come to you. And I think this one, right? So this one, the price would have come to you right there and it would have gone to TP, right? So you see the difference? So if you're trading, especially when you come to the question of order blocks, if there are no order blocks between your stop loss and your take profit, and if you're in a sell and you have an order block that's past your stop loss, ask yourself, do I want to just be in the trade, but I say triple my stop loss and TP, or do I want to take the risk of missing out on the trade, but I keep my TP and stop loss, and instead of setting my pending order at the SAR level, I go ahead and set my pending order at the order block. Personally, I don't like missing out on trades, so I think for me, when I would have done that math, I would have been like, do I want to be in a trade on gold where my stop loss is $30 and TP is $30? No, I do not. Normally for me, my maximum TP and stop loss on gold is $20. I don't want to start going into the 25 to the 30 range because you'll probably be in that trade for like 2 days. So for me, in this particular trade, if I had a choice between tripling my stop loss and TP or risking missing out on the trade and just setting my pending order at this bearish order block here, I would have gone for this trade right here. So that's just a little caveat on how you would have done. But anyway, if you're just trading every trade right here, unfortunately, you'd have lost this trade back to back. Same thing with this one. You'd have avoided these 2 losses right here and made them to 2 wins by setting your pending orders at the top here. But anyway, so this one, if you're just trading the strategy as is, unfortunately, this one would have been in a loss. But again, keyword here. If you're ever trading and there are no order blocks between your stop loss and your take profit, ask yourself, where is the nearest order block in the direction that I'm trading, and just, do that distinction. So here you'd have been, I think, back to break even or -1 or something for that month. This particular one here, for this one would not be an entry for a buy. It satisfies Confluence 1, satisfies Confluence 3, but again, here you see this overlap that I'm talking about. We have a green zone inside a red zone, so this one I wouldn't even have taken that buy. And if you would have taken that buy, unfortunately, trade would have ended up being in a loss. Same thing for this sell right here. This sell right here would have been in a green zone, so it's not even if I'm not wrong, this sell would have been in a green zone, so it's not even a trade I would have. Let me see, what time is it again? 10:45. Okay. Actually, wait. So this cell right here, let's see. Okay. So the problem with backtesting is that you don't know when the green or red zone is coming up. But if we go back to this bar right here before this, we have a, let's see. So we're in a red zone. I think when this candle closed, when the new one opened, that's when the green zone came in. So let's see what happens here. So this candle that gave us the SAR zone, did it interact with it? Yes, so it interacted with it. So when you're backtesting, sometimes these zones will just be all over the place. But if we go back here, you'll see that by the time the SAR was being created, we were in a red zone. It's only because when the next hourly candle came up and it spiked up, that's when the green zone came up. So yes, this is a trade I would have taken here. So we were in a red zone. We have a daily bearish high order block right there. TradingView is giving us a 12 or $13 stop loss. I just round up to $15 right there. And yeah, and then this one would be a win as well. So yeah, so that's pretty much it. So I think it would be like net one win so far or net two wins. So hopefully you guys understand that analogy. And during these live sessions, we are probably not going to be getting some of this. So what I'll be doing during the live sessions is to look at the day before and see if there are any entries. If I do get these entries, I'll be sending them in the Discord. Again, I'll go back to being active. Last year was just a lot of things happening when I stopped live streaming. But I should be back. So I'll be when I see them during the day, I'll send them. Again, I'm not gonna be sending every trade, but the ones that I send, of course, those will be the official ones. If we do get any entries during the live session, definitely I'll be taking them. Now, there's this strategy. This strategy, again, will give you like what, 8, 10 trades, whatever, during the month. And then we have the trend line and SAR strategy. So this is what we used to use last year. So I'll go over it tomorrow. Let me see if there were any trades today for it. I don't see any entries. Give me 1 second. Let me see. I'm looking at my other chart. Let's see, we might have had one. If we replay here. So if you guys remember, like test and rejection of a trend line, break and continuation of a trend line. But I'll go over them. Yeah, today we didn't have any ones right here. Let's see. Clear this notifications. So there was nothing for US 30. Nothing for gold. So yeah, so rarely are we going to find, not rarely, sometimes we'll find these entries. Again, it's on the hourly time frame. So same analogy, if you're trading it on the 15-minute time frame, right, you'd be looking for the same things. So same thing, you'd be looking at it on the 15 minute or the 30-minute, but there was no entry on the hourly or on the Bitcoin had something on the 15-minute time frame. So let's do a quick run of BTC here, and then afterwards I'll just go over the statistics for last year, where I back tested every single one. So here for BTC, let's see what we have here. So we have this 15-minute entry here. So here you go ahead and set a pending sell limit at the top there because you're in a sell zone. TradingView is giving you like what, a $400? No, is this a $400? Yeah, $400 stop loss. That's pretty low for Bitcoin. So I would go for like $1,000 TP and stop loss. And let me see here for BTC. So this trade would be running for Bitcoin. Only thing here again, right? This order block is not too close to our entry, but again, it's a little bit of a red flag. So you don't want to have, if you're selling, you don't want any bullish order blocks on your way to TP. So you can see here, as much as the trade was tapped in, they are building support at that hourly bullish order block. So, but anyway, it's still a valid trade, but it's kind of like maybe a B setup. Okay, so let me bring up the statistics from last year, if I can remember where I saved them. But if you guys have any questions, you can ask. That's prime break of support. I think it's in my documents. SAR rejection stats 2024. Okay, so let me share this screen. Let's see. Okay. Share screen. So if I share this, hopefully I'm sharing the right thing. Okay. So I back tested US 30, gold, and Bitcoin. So for US 30, In January, there was a net loss of, and this is 2024. January, there was a net loss of one trade. So however many trades there were, uh if there were five trades, what is it? If there were five trades, sometimes I'm terrible at math sometimes, but I think if there are five trades, if you have a net win of or net loss of one, what is it? There were three losing trades and two winning trades, and that's just putting a figure right there. So assuming there were five, assuming there were nine, same difference. But in January, assuming you're doing 1%, so I was doing this back testing, assuming I'm taking 1%, I'm risking 1% per trade. I'm following all three confluences. So for January, would have been -1, February, +1. So you'd have been break even between January and February. In March, you'd have had two winning trades, so 2% gain. April 3% gain, so that's 5% already for the year so far. May you'd have lost 3%, so you'd have been net up 2%. In June, you'd have lost 2%. So June was a losing month for the rejection. So this is only for rejection. For rejection. So you'd have been back to break even for June, and this is for US 30. So again, you guys know I like US 30. I trade US 30 gold and Bitcoin. So by June, you'd have been back to break even. In July, you'd have been up 4%. In August, zero break even month. So for the month up until August, you'd have been up 4% for the year. September, you'd have lost 5%. So September was terrible for the rejection entry. And some of this, looking back, when I tell you, like, for example, when I'm telling you guys that if there are no order blocks between your stop loss and take profit, find where the nearest order block is. That is going to save you some losses. Yes, you might miss out on some wins, but I've noticed that pattern, and especially on Fridays, like that pattern has happened like 3 times. So if I were to go back to say September and say, if for the valid trades where there's no order blocks between TP and stop loss, but say there's a bearish order block for a sell above my stop loss, and I go and set my pending order on the order block itself, then the losses would have reduced here. But anyway, let me go back here. So break even up 2%, so you'd be back to break even up 4%. September, you'd have lost 5%, so you go back to being -1%. And then October was amazing, though you'd have been up 9% on the month of October so far, so you would have been up 8%. So I never got to backtest November because I stopped trading around November-ish. So, but up until October, you'd have been up 8% on US 30 alone. Gold is nice for this strategy. So for gold, January up 3%, February break even, March you lost 3%. So by March you'd have been down break even. You'd have been at break even for March. So in April, you'd have been up 5 wins, so 5% plus 1, 6, 7, 8. 8 plus 5 is 13, 15 minus 1, 14, 17%. So gold, if you took every single gold rejection entry in last year up until October, what was that? 17, 5, 6, 7, 8, 13, 15, 14, 17%. 17, so 17. Let me do this so that in future. So total equals 17%. And then this one was what? Break even. Break even 4 minus 1. This is 8%. Total equals 8%. Okay, now Bitcoin has a mind of its own. If you look at Bitcoin here, you'd have lost 7% in January, up 3% in February, so you'd have still be down. So, and assuming, I'll show, yeah, this one as well. So if you're doing US 30, you would have never blown your account. If you're doing gold, you would have never blown your account. And what I'm doing currently, so I have an account with what? I have a couple of accounts. I have some funded accounts with Top One Trader. So one funded account for Top One Trader, I am using the trendline and SAR rejection entry, which that's one of the common ones we use. And then I have two other accounts with Top One Trader. So one account is only US 30 trades. the other account is only gold trades. So the other thing, if you're trading this rejection entries, I would recommend you have one account per instrument. Don't have one account and you're taking US30 and you're taking gold, because if you're in a losing streak on gold, like here, let's assume in May, you're in a losing streak on US30, -3% and -2%, you'd have already been down -5%. And some of these prop firms, you have like what, 5% or 10% overall drawdown or 8% or something. But anyway, I would recommend you to have one account per instrument. Or if you only trade one instrument, then you're fine. So you can see gold here, a total of 17%. For BTC, -7%, and this is what I'm talking about combining instruments in one account. But anyway, BTC, you'd have lost 7% in January. February, you'd have gained 3%, so you're still down -4%. In March, you lose 1, so you're -5, -7, then you're back to -6%, and then this one is -8%. So this one, by the month of July, you'd have blown your account for this particular one. 4, 5, 6, 7. Yeah, you'd have blown your account. Again, this is assuming, and even if you have the, what is it called? These futures firms where they have a trailing drawdown, where they have, and I think futures firms, they have what, 6% overall drawdown. So you'd have blown your account in July if you're trading BTC. And actually, give me 1 second. Yeah, you'd have blown your account. And this should be assuming like assuming a 6 to 10% overall drawdown, depending on what your prop firm. But you can see BTC by this time you'd have been, I think, -6. Then you come back up. But anyway, so BTC is just not valid for this strategy. I haven't found a way to get BTC to work. Let's see. So for the break and so this one is the statistics for the break and continuation entry. This one gives you far less trades, even far less than, again, I told you guys, normally it's beginning of London session or sometime in Asia session. So here for the break and continuation entry, and this is only on the hourly time frame. Again, that's the only time frame that I trade. So this one would have been 2, 3, 4, 7, 6, 7, 8, 7, 8, 9, 10. So 10%. So actually not bad. The issue is that just the times that it comes in. So again, this is the break and continuation entry. Just a second. All right. For gold, let's see. One, you go back to -1, you go to +1, 2, -1. So here for gold, total of 1%. And let me run that back, because -1, +1, +2. Yeah, 1%. Okay. Now for these trades, I was doing the math on this last year. So let's assume if you're risking 1% per trade, how much would you have made here? So 17 plus 8, that's 25,000. So if you're trading both US30 and gold, so if you're just trading gold that last year and you're taking every trade, you'd have made like 17,000 if you have a 100K account. If you're risking 2% per trade, 34,000. But anyway, gold 17,000. That's assuming you're taking every trade. So just half that. Just take that by half. You'd have at least made 8,000 last year on gold alone. And this is just one strategy. If you're trading both strategies, you'd have made 25,000. If you're assuming you found a way to automate every trade, you'd have done like 25,000. If you have a 200K account, 1% per trade, 25 times 2, 50K. 50K for the year. Even take half of that out if you have because pretty much 4 out of my 6 accounts are 200K accounts. So if if you're doing 200K, so assuming you take every trade for gold and US 30, you'd have made 50,000. Of course, you know, it's pretty difficult to automate this strategy because you need to look at all those three confluences. So even chop the 50K by half, you have $25,000. If you're copying those across like several accounts, right, you can see the return on that. So yeah, so this is pretty much the return on that. And this one was assuming you take every single trade and you apply all three confluences like religiously, but you know, that's not possible. So you just take what you get. So the key thing again, find whatever time frame works for you, and then I apply the same three confluences. Whether you choose to do it on the 4 hour time frame, whether you choose to do it on the daily time frame, you just keep doing that. Before I end, let me just give a quick one for the daily. I think there was a daily entry somewhere on, I saw it this morning. If we go on the daily time frame right here, you can see this. What was it? Was it Bitcoin? Uh, maybe was it daily? Yes, this one on BTC. On BTC right here, Um, we have actually, I wouldn't have taken this because yes, we're in a red zone. However, this one I would have done like a $5,000 stop loss. $5,000 stop loss. Red flag for this one would have been this bullish order blocks that are above your stop loss. So actually, yeah, this one I wouldn't have taken it, but same analogy. Same analogy here on the daily, because we have this 4 hour sell SAR level. You had this daily candle that failed to close above. You set your pending order there. If we didn't have this bullish order block here, then this one would have been a nice trade. But anyway, even on the daily time frame, you know, you rarely get actually here, look at this here right here for US 30. I think this one was a nice one. If we do this right here, let's see. If we do this right here for US 30, so you have a rejection off of an SAR level, you're in a green zone, you go ahead and set your pending order. So for this one, it's giving you a 300 point rejection, 300 point stop loss. So maybe you go and do 500 point. You come and get tapped in. So if you do a 500 point, you'd have gotten stop hunted or stopped out and price would have gone up. But again, same thing with this one. When I talked about whenever your entry is nowhere near any order block, you go and ask yourself, where is the nearest order block? So technically here, right, you could have lowered and waited for price to come to you here, but price would have never tapped you in, right? So that's the opportunity cost of, say, waiting. So here, on the other hand, other than even doing that 500, say you increase your stop loss to be this wide, and this is pretty heavy for US 30. This is like, actually, it's not bad. This one, if you go 15, so this one would be 1,500 points for US 30. So actually here, in this instance, I think maybe doubling your stop loss would have been, or doubling your stop loss and TP would have been the way to go. It would have been pretty heavy. So this one, yeah, this one, maybe doubling your stop loss would have been the way to go for these trades. Yeah, but the key, the challenging part, I think, is going to be when you are taking a trade and there are no order blocks between your TP and stop loss, because you have to make that decision. Do you want to double or triple your TP stop loss, or do you want to just play it safe and take the risk and avoid getting stopped out? So yeah, but for US 30, this one is actually, given this is a daily time frame, so you always, also the other part, ask yourself, are you trading the daily time? So for the daily time frame, if I'm doing the same thing for gold, for daily time frame, I think maybe I'm willing to go for like a $30 stop loss. But if I'm doing the 1 hour, I'm not willing to do $30 stop loss on gold. For US 30, if I'm doing 1 hour time frame, actually, this one wasn't a bad one for US 30. 1500 on US 30 can even get, no. Actually, I was thinking something different. For the daily time frame, 1500 stop loss is something that maybe you can look into. The other one, again, make sure to look at the, sometimes I also forget as well. Make sure to look at the 9 EMA and 200 EMA. That can also guide you on where to put your stop loss. So because here you can see the 200 EMA was somewhere below this bullish high order block. So this one was a nice area to put your stop loss. But anyway, yeah. So during the live sessions that I'll be doing nowadays is just to recap on the previous day's entries to see if there are any entries and just to recap them until you guys get them. And then we'll be, if we get a break and continuation entry during the live session, we'll take it. If we get a test and rejection entry during the live session, we'll take it. Again, those will be rare to come by, but the ones that will probably be coming by are the trend line and SAR rejection levels, and those ones will be taking as well. So last year, the trend line and SAR rejection levels were my most profitable one. Let me share the other screen that has the trend line and SAR level one, just to give you guys a refresher on that. Is it this one? Yeah, I think it's this screen. So trendline and SCR, and luckily I was able to automate this. So trendline and SCR rejection. Let me find an example to go through. All right, so this one, let's see. Let's find an example somewhere. We turn this off. I don't want to go too far back. Maybe we'll get a cell here. Maybe turn this just to reduce the color. Let's see. Maybe, yeah, okay. So for this one, same analogy, right? Same three confluences, test or break and continuation. However, with this one, we are using the trend line and the trend line and then SAR rejection. So here, what you're looking for, you're either looking for a rejection. If the candle is rejecting from the top, it's a rejection resistance. That's why I've labeled it that way. For this RS, it means rejection support. So what you're looking for in this instance, you're looking for price to give you a rejection resistance for a sell, rejection support for a sell. So rejection resistance means that price is rejecting from resistance. And then you ask yourself, is there any SAR level? So the difference between the SARs that I was showing you guys before and these SARs is that these SARs, they are valid for 500 candles. The other SAR that I just went over, the majority of this session, are only valid for 5 candles. So for this one, they're valid for 500 candles. So what you're looking for, same three confluences. Ask yourself, is it a rejection? Is it a break and continuation? If it's a rejection, confluence number 1. Number 2, if you're selling, are you in a red zone? Are you in a green zone? So we're in a red zone here. For this particular one, I'm not too worried about overlaps of zones. Because again, this one I'm only trading it for the 15-minute, 30-minute time frame, mostly those two. I can also trade it on the 1 hour, 4 hour, etc. Then what you want to do, what I normally do here, so the entry would have been, so this one right here, we would have gotten a rejection resistance there, and then I would have been, okay, we've rejected against the resistance line, and then we have this SAR, red SARs right here. So for each instrument, I have 2 time frames, 15-minute, 30-minute, and then I have green SARs for a buy, and then I have red SARs for a sell. So, and then I have alerts that are set up. So here I would have had an alert, and I set an alert at the most optimal SAR level, which would have been here. And then I would have taken this trade there. Stop loss above the previous high. So for this one, it's just stop loss above the previous high. Same thing, round up. And then you'd have gotten tagged in there and full TP. So to me, this is my most profitable strategy, and then followed by the other one. This one gives you a bit more entries, but you always have to look. Once the alert goes off, Once your rejection resistance or rejection support goes off, you check if price has closed above an SAR. So for you to take a buy, you have to have had a rejection support alert, and then price would have closed above a green SAR. And then you ask yourself, which is the most optimal green or red SAR, price close above or below. You set your alert there, and then you go ahead and enter when price comes to that zone. So for me, the trend line and SAR rejection was my most profitable strategy last year, followed by these other SAR levels. So for this SAR trend line and SAR levels rejection entry, and sometimes you can also do a break and continuation, because if you see here, we have a PBR or PBS. So PBS is a prime break of support. PBR is a prime break of resistance, but I normally don't take those. I just shows you like a break of structure. Normally I don't take those, but again, same thing with this prime break of resistance, prime break of structure. You will find most of these entries during London or Asia session. So let me show you guys like an example. So, and mostly you'll find them when the candles are consolidating, like small, like little candles or something. So let's see here. So I can tell this was during Londonish, maybe. Let's see. Yep, so this was during Asia. So this consolidation period, prime break of support. Here for gold, we didn't have a prime break of resistance here. Let's see for US 30. During this uptick, we didn't have any. Okay, let's see. What time is this? Okay, so you see this right here? If you look at this zone, let's see. I'm looking for a rectangle. So you see this zone right here, this is Asia session. You can tell, you see these candles. So the market already started dying down here. So you can see here, it's like 8 p.m. at night, right there, right? So you see this prime break of support right there? It came up at almost midnight, 15 minutes to midnight Eastern Standard Time. So if I was an Asia trader, or I traded the Asia session, these are the trades I would just be taking. And this one you're just taking break of support, and so here you don't. So if it's a break of support, it means it's broken the support level. So this one, and you ask yourself, what zone are we in? We're in a red zone right there, or price is coming from a red zone. Then what order blocks are we in? We have a weekly bearish low order block there. Above us, we have this daily bearish low, but it's Asia session. Price is not going to jump up 800 points on US 30 unless there's a catastrophic thing that happens during Asia session. So, right, this is another one. You just take that, stop loss above previous high. And you see this one? This one, you just go stop loss. I think you'd have had what, maybe 80 points or something, or you just go for 100 points. And 100 points is nothing for US 30. But since this is Asia session, this would be like a slow moving thing. So you can see during Asia, during London or whatnot, and then price comes back down. So those break of resistance and breaks of supports that come during Asia session or right before the beginning of London session, those are pretty nice, but normally I'm asleep. So for anybody who trades Asia, if I was awake during Asia session, like honestly, that's all I'll be trading. But anyway, that should be it for today. Unless you guys have any questions, let me know. But if I find any entries, so if I find any entries today, I will go ahead and share them in the Discord. So I'll go back to being active on Discord. Yeah, last year I just had a couple of things that I had to deal with that interfered with my trading. But again, this one would have been another trade on gold that was going on. So you guys remember when I was talking about knowing when to, so this is a trade that I'm in right here for gold. So this trade came in, yeah, so it was right here. So this one, I made sure the stop loss was below the 200 EMA, right? And you can see how price supported that and price came back up. So this one, I had a pretty wide stop loss. So this one, actually, yeah, $20. So I told you guys, normally for gold, my maximum will be like 20, $20. So you can see this trade is back in profit. So this is why I like this strategy. Like I find it to be stress free. Same thing about Bitcoin. This Bitcoin entry here, this BTC entry price is back at entry. But I don't think I'll be trading Bitcoin this year. I think I'll just focus on US 30 and gold. But yeah, so this strategy I like it because it's so unless all confluences align, you don't have anything to do. Like you just sit on your hands. You get fewer trades in a month. You get highly probable trades. I just showed you the statistics for 2024. It's like that win rate. If you have like multiple accounts and you copy them, you can easily make at least $50,000 a year. Say if you have like 200K accounts and like maybe 100K accounts and you just risk 1% per trade, you can easily make that. Yeah, so for the whole of last year, you couldn't have blown your account with US 30, you couldn't have blown your account with gold, but for BTC, you'd have blown your account at some point. But anyway, let me know in the Discord if there's anything else. I need to take a break, but I'll see you guys tomorrow and we'll see if we get. So you see, okay, real quick right here for gold, there's an SAR level that has been created, this 4-hour buy area right here. So let's see what, so it's been created there, but until we have a candle that interacts with that level, it's of no use to us. So for me, in my mind, I know that in 1 hour, or what time is it? In the next hour, I need to check how this candle closes. If this candle closes, tries to close above and closes below, it would satisfy confluence 1. However, let's see what zone we are in. We're in a red zone. Okay, that's good. What's confluence number 3? The order blocks. We are in a bearish order block. So our entry would be in between a 4-hour bearish high and 4-hour bearish low. Only issue is that if I were to take this trade, the entry, yes, would be, excuse me, the entry would be here, would have a $10 stop loss. Have a $10 stop loss there. The TP, so one of the bullish order blocks is about 30% of my TP. So this is one of those trades that it might end up being stopped out or might end up in this trade for like until tomorrow during New York session. So for this particular trade, I would not take this trade because we have three bullish order blocks towards our TP and only again 3 bullish order blocks or three bearish order blocks around. So ideally it's kind of risky. So in any case, for this particular trade, instead of putting a pending sell order at this buy level, I would put a pending sell order at this hourly bearish low at the top there. And that aligns with my TP for this trade. So remember, SAR, stop and reverse. Most of these trades that I take, as soon as price hits TP, a good amount of time price reverses. So for this gold trade, in any case, I think instead of putting my pending sell order here, if this does what is it called? If this does validate, instead of putting the pending sell order there, I think I'll end up putting it up there. But we have a couple, maybe the next 2 hours we'll know, because again, if price closes above this 4-hour buy, then I have no business looking for a sell, and I even have no business looking for a break and continuation entry because we would still be in a red zone. So right now, it's pretty much sitting on your hands on the hourly time frame. There is no entry for US 30, there's no entry for BTC. BTC already had an entry here. Actually, BTC had 2 entries. There was this one that I was following, and if you look up here, there was this other trade right here for BTC, and I think this one had like what, a $1,200 stop loss. So you round up to the nearest whole number or psychological level. $1,500 TP. This one would have already hit full TP right there. So if you can see this one would have been a nice one. Again, for this one, yes, you're in no man's land. So this one, it's possible that price would have come and tapped in the 4-hour bearish low order block. However, right, it's up to you to make that decision. But for this one, I would have taken it as is, because this stop loss, this bearish low order block, it's like 40% of my stop loss. So for them to come and pump up this order block and also take me out, it just means that price is bullish and not really even looking to reverse. But if you want to be safe, yes, you could do that. Or on the other hand, instead of having a $1,500 stop loss on Bitcoin, which is 1,500 is nothing for Bitcoin. So you go for a $3,000 stop loss, you'd still be in the trade, and right, you'd still be in the trade and the trade would still be running. But anyway, yeah, this year I don't want to, I think I'll stop trading BTC and just focus on US 30 and gold. But anyway, yeah, if you guys have any questions on this, I'm working on making like a PDF, like a book on all these trades to show you like what is valid, what is not valid, what to look out for, possible alternative scenarios for each. But maybe that will be over the next month or two, because I'm working on other things as well. But I plan on just coming up with a manual for all these strategies, and then we can go from there. But anyway, I will see you guys